is where we start today. Kristina Partsinevelos has more on that story. Kristina.
Hi, John. Well, Nvidia just revealed in its 10Q that 3 customers account for 56% of its accounts receivables, igniting this big debate over concentration risk. The bear case. So if Microsoft, Google, or Amazon suddenly prioritize software efficiency over hardware expansion or hit pause on AI spending, Nvidia's revenue engines seizes up. Bulls see market reality, not risk. Only a handful of companies can write $10+ billion checks for GPU clusters. You don't just buy an individual chip here and there. Instead, these firms buy thousands and all the racks they go in. The CFO's latest disclosure, John, that you just mentioned, shows Blackwell revenue hitting, quote, all customer categories, with cloud providers at roughly 50% of data center sales, suggesting the base is broadening. Notably, Nvidia has become less precise, though, about identifying the largest customers in recent filings, possibly at the request of the companies. The real question, though, is this concentration structural or temporary? Bulls point to massive pent-up demand from sovereign AI projects waiting in line for their GPUs. Bears worry software optimization could reduce hardware appetite faster than new customers emerge. With supply still the bottleneck, this may reflect current market structure rather than just business vulnerability. The test, though, comes when we see whether Nvidia's customer base naturally diversifies or remains concentrated among the few who can afford to play at scale, John.
Kristina, it's an interesting point, but here's my argument about this issue. I think that maybe the hyperscalers are aggregators of demand right now more than they are creators of it. In other words, their customers are the ones who are demanding what chips they want, and these hyperscalers are able to give them access to those chips, perhaps at a discount. But it's not like the hyperscalers can say, oh, we're dumping Nvidia all of a sudden and going with AMD or somebody else, and the customers will just say, okay, if they want Nvidia, they're going to switch from Amazon to Microsoft or from Microsoft to Google. What do you think about that?
Then if those customers or if those cloud providers procured all the necessary chips to sell or rent the space to customers, then what do you do 2-3 years down the line, right? Nvidia does have to diversify eventually. These cloud providers can only buy to a certain extent before shareholders start to get angry about the return on investment. So to your point, perhaps they are a barometer for the demand in the market. Makes total sense. But at some point, they're going to hit full capacity, whether it be cost, whether it be even the infrastructure and the qualified talent to build these data centers. I just feel like there might be a wall hit soon, and that's when the diversification has to happen amongst the customer base. And so just how long is that time frame, John?
One wonders. Kristina, thank you.